Today we are going to discuss about capital budgeting in financial management. First of all, what is a capital budgeting? It is an investment decision of the company. Already we have discussed about the financial decisions of a company. In that we have seen the long-term decisions and short-term decision. Under long-term category, we have seen the first decision as investment decision. That investment decision is what is called capital budgeting decision. Capital budgeting is the process of making investment decisions in capital expenditure activity. The capital expenditure activity may be purchase of a machinery, construction of a building, introducing a new product in the existing product line, or starting a branch at a different place, increasing the size of a unit, mechanization of a company, whatever it is. So whatever capital expenditure, in that we are committing large amount of funds, that is what is called capital expenditure activity. So capital expenditure activity or capital budgeting activity can be defined as commitment of large amount of funds in long-term assets in anticipation of an expected flow of benefits over a series of years. So, in capital budgeting activity, we are committing large amount of fund, and it is a long-term asset. The asset will last with the company not for 1 year period of time, it is for more than 1 year period of time. So obviously it is for 5 years period, 10 years period, 15 years period, likewise it may go. Okay, and we are doing the funds, we are committing the funds, we are investing the funds in the activity in anticipation, on the expectation that the benefit will come over a series of years in future point of time. So this is what is your capital expenditure. Okay, and why we need to study about capital budgeting decisions in a detailed manner in financial management. The importance of the capital budgeting activity can be studied under different categories. It involves large amount of fund. Capital budgeting decisions involve large amount of funds. The funds available with the firm are always limited, and the demand for funds far exceeds the resources. Hence, it is very important for a firm to plan and control its capital expenditure. Long-term commitment of funds. Capital expenditure involves not only large amount of funds but also funds for long-term or more or less on permanent basis. The long-term commitment of funds increases the financial risk involved in financial decisions. Greater the risk involved, greater is the need for careful planning of capital expenditure, that is capital budgeting. Irreversible nature. Capital expenditure decisions are of irreversible nature. Once the decisions for acquiring a permanent asset is taken, it becomes very difficult to dispose of these assets without increasing heavy losses. Long-term effect on profitability. Capital budgeting decisions have long-term and significant effect on the profitability of a concern. Not only the present earnings of the firm are affected by the investments in capital assets, but also the future growth and profitability of the firm depends upon the investment decisions taken today. National importance. Investment decisions, though taken by individual concerns, is of national importance because it determines employment, economic activities, and economic growth. So, Without using capital budgeting techniques, a firm may involve itself in taking a project.